Welcome to The Growth Show with me as your host, Joe Camerato. I am an entrepreneur who created my company, National Business Capital, from literally $0 out of my spare bedroom to over $2 billion in business loans secured for entrepreneurs nationwide. Since 2007, I have seen just about every type of business. I provide money and help entrepreneurs access capital to scale fast, but I also know that it's possible for you as you scale to replace yourself, to build systems, processes, and great teams of people that can live on without you so you can actually enjoy your life and your company can still grow. I will not only tell you the peaks and valleys of my story, but I will also bring on world-class entrepreneurs to tell their stories and share their lessons on their growth journeys. Welcome to The Growth Show. Welcome to The Growth Show with me as your host, Joe Camerato. On our show, we're all about featuring rockstar entrepreneurs that are making it happen in their industries, who are leaders, and most importantly, continue to keep growing. Have a special guest on today, Stephen Pesavento. And Stephen's got an awesome background. I'm excited to share with you. I always love having people on the show that come from nothing, just like myself, and made magic happen in their business. Stephen is on a mission to create financial freedom for a million investors. He's an active investor who helps clients build wealth and cash flow through commercial real estate investments at Von Finch Capital. As host of the Investor Mindset Show and certified high performance coach, he has raised tens of millions of dollars, invested in hundreds of millions of real estate, beginning in a single family as an operator. He bought and flipped over 200 houses in under 3 years. Prior to expanding into commercial, to focus on building a business around working with his ideal client, successful high income earners like himself who are investing to create flexibility and independence. Well, thanks for coming on the show, Stephen. I appreciate it.
Hey, super good to be here, Joe. Love what you're doing, and excited to get into it today.
Yeah, man. So we, talking a little bit about this, but you started from zero, always grew up worrying about money, and and here you are rocking and rolling. I know for me, I didn't come from money and grow up with money, and money was definitely always a challenge in my household. And, that fuels really my fire still till today. Is that what sparked you to make it happen in business?
Yeah. I mean, I grew up, parent or child of two amazing parents, oldest of four, but, they got divorced when I was young and they really didn't like each other. And one of the big things that always came up was, a lot of stress, a lot of pain around money. It was always, we can't afford this, go ask your dad for it. Kind of one of those things where there's always a deferral. There was never enough. And so I remember growing up, and I had a grandfather pass away when I was young, but he was always the inspiration because he was a business owner and he was a happy guy, a jolly guy. Everybody loved him. And he just seemed like he was living this good life. And I grew up in a blue collar household, and I learned how to work really hard. And that's a super valuable skill. But it wasn't until I actually started finding mentors digitally, around me in person, that I started to realize that, this is possible for me. I don't have to live like that, and I can break out of this. And it's absolutely fueled me to be where I am today. And at the same time, I've also had to let go of that so that I can be fueled to go to the next level, because what got me here isn't going to get me where I'm going.
Makes sense. And I completely get that, and respect that. And same thing, parents got divorced young, and it was always, always challenges. And I hated it then. I appreciate it now because it lit a fire in me. And when, times get tough, it's a nice reminder. And, and it just really has helped me continue to put the pedal to the metal.
Mm-hmm.
And I think, when you, come from, nothing, it's, not that it's like never enough, but what it's like, and you just don't want to go back to that. So for me, it's just a big driver and a motivator. And I've turned it into that. It used to be a demotivator in some ways, but I've turned it into a motivator.
I feel like when you actually take ownership of it and you find that you're going to, you know, effectively blame all of those bad things that you experience in your life and really say, hey, well, because of those, I am the man that I am today. Like, I'm grateful for all of the tragedy and trauma and tribulations that we dealt with growing up, because it actually made me into the person that I am. I had to let go of that in order for me to really be able to grow into the person that I have been and am meant to be. But it's one of those things where it's like, absent that type of tough times, you know, those tough experiences, those experiences of being scared and fearing what's going to, you know, what's going to be happening next, that really does set you up for success in the world if you use it. Now, a lot of people use it as an excuse, but you can use it as fuel to really kind of push you forward. And, you know, it's one of the reasons that after starting multiple businesses, some of them successful, many of them failures, and that's what business is all about. You've got to go through those tough times, that fear that you're feeling of, oh, I don't know if this is going to work. But once you've learned how to live within that and not have it eat you alive, that's where you really get power.
That's right. I couldn't agree more with that, and it is powerful. So, what made you pick, real estate? Like, how that kind of come about, and I think that was in 2016. Like, what made you make this leap and shift?
Yeah. So, I mean, when I was growing up, when I was a kid, I either wanted to be a chef like Emeril Lagasse or wanted to renovate houses like Bob Vila, and watch a lot of HGTV, a lot of Food
That's
Network.
awesome.
I worked in kitchens from like, 12 until 20. But I realized like, okay, well, I don't want to be doing that. I don't want to be in the muck of it. But the reason I got into real estate was because, I read Rich Dad Poor Dad when I was 17, and it kind of gave me this idea that, oh, I don't have to be that poor kid. I don't have to be the kid who stays in this world. And it gave me at least a little bit of an idea, a little inspiration. And I went out and tried to buy real estate when I was 18. It was 2008, made one offer. My offer was higher than the other buyer, but they were a better buyer. And so, of course, the bank sold to them. And I kind of gave up because I was just surrounded by other people who thought this was crazy, right? And I kind of kept coming back to it. But I went that traditional route because I was looking for security. I was looking to make sure that I wasn't going to be in that situation that I grew up in. And then when I got into it, I realized like, wow, being in the corporate world doesn't solve it. I can be making way more money than my parents out of college, but I still got the same problems, right? I got more money, but I'm working in an environment that wasn't really inspiring me. So, I left Minneapolis, left management consulting, went and started working in tech, started a startup with a couple other guys that I'd met who had just graduated from Stanford. And, we ran down that startup route. And while I was doing that, I started doing Airbnb. I was dating a girl in another state, and I rented out my house for a weekend to go visit her. And I got paid to go hang out with this girl. And I was like, wow, this is it. And so I ended up getting 3 of those, and they're all rentals that I re-rented on Airbnb, and I was printing money. I was essentially self-funding this business, and that became the bootstrap model for every business I started from there. I was just using Airbnb to pay for my expenses, to allow me to go take more risk. And eventually I had this moment of clarity where I came back to real estate after, working in the startup space. And I realized like, why am I doing anything different? I should really push harder into real estate. And at the time, Airbnb was getting outlawed all around the country. So my 6-figure income off of a couple properties all of a sudden was illegal. And so I was like, hey, well, what's another path? And so I found my way into flipping houses, didn't have a lot of cash in the bank, right? I was spending most of what I was making. I was living life. And when I started down that path, I just went and found a great mentor to learn from. I traded my skills and expertise for the ability to follow them around. And, I put 40 grand of marketing on my credit card over a couple months, and eventually found my first deal. And then that first year bought, 75 houses. So I was able to build something quite scalable.
Wow.
once we'd figured it out.
Well, one is nothing like putting the marketing money on the credit card and getting that bill. I've been there myself when getting started. It's always fun getting those statements.
Yeah.
Um, and how did you do 75 houses in the first year? Did you raise money like from others? Like how did you get like was it, were you buying in all cash? Like talk about
Well,
that for others listening.
Well, at the credit card, there's nothing better than 0% financing for 9 or 12 months, and just
Yeah.
continuing to push that. But you got to have confidence in yourself to really be able to risk it, that personal dollars that you're putting into the business. But the way that we scaled is, we were buying houses directly from homeowners. So, we're buying houses from people who are in distress. The house is in distress. It's a problem property, and we came in to solve that problem. And so we were doing, 100,000 mailers a month. We had text message campaigns way early on. I really hate them today, but they worked well back in the day.
Yep.
And we just had this machine that was focused on blasting out lots of marketing and then having those people who maybe are a potential client raise their hand. And, we'd go out and, do the pitch and, work to buy the property. And because we were buying things so far below market, because we were buying them at such a great discount, a great price, it was easy for me to then turn around and go to a private lender or hard money lender and be able to, essentially borrow that cash, almost putting nothing down. On the first couple, did have to put some cash down, but for the most part, was able to essentially buy and sell these houses, start creating profit for the company. Maybe not even doing renovations, just closing on it, selling it to somebody else, and then eventually really being able to grow this thing, just based off of raising capital.
Yeah, that's amazing. That's awesome. Yeah, those were definitely wild times, and the first one that you lost in '08 when you're 18, that was probably a blessing in disguise.
Yeah.
Um, but there's a lot of opportunity out there, and it's funny. What year is it when you did the Airbnb stuff?
So end of 2013 till about
Wow,
2016, and then I kept doing Airbnb on and off. But it's a lot of work and it's kind of interrupts your life, so I don't do much Airbnb anymore.
makes sense. But my point was like that was like really, really early on and innovative, and the whole little arbitrage with the rental. I mean, most people didn't even know about that stuff. So you were definitely ahead of the time. Now it's such a big talked about thing all over the place. But back in 13, I don't even think most people even knew what Airbnb was, never mind what you were doing.
I mean, back in 13, I could rent an apartment for $1,200 a month, and I could rent it out on a 12-month average. I was making $4,500, right?
Wow.
I'm
Yeah.
3xing my cost of rent. You can't do that today. People are happy to get 10, 15% managing Airbnb, and I'm like, it's a lot of work. I don't know if it's really worth that. But it
Yeah.
can be a great way to get started if you're looking to invest and you want to trade your time for money, or you can put the right people in place.
Yeah. Yeah. That makes sense. That's awesome. Well, good stuff. So let's talk about like, the investor mindset podcast, and name your number. What's that all about?
Yeah, so I've been running the Investor Mindset show for 4 years, over 1 million downloads. And
Nice.
it's been a lot of fun because I've got to interview some amazing people. Early, right after Chris dropped his book, got to interview Chris Voss, got to interview Mark Manson, Subtle Art of Not Giving, and a lot of other really successful people. And so through that show, I was able to not only connect and learn for myself, but be able to share that with the audience. And the show has really grown and morphed. And, we recently just launched a new show called the Name Your Number Show by the Investor Mindset. And that show is really all about really making an example of the people who've already reached financial independence. How did they get there? They built this business. What was the strategy? Did they exit? Are they just continuing to collect cash flow? Are they taking that money and then investing that into private equity and going down that path? Or do they have some other way that they're working towards it? So what I love about Name Your Number is it's something that I really discovered for myself. It's groundbreaking in the sense that when you apply this to the world of investing, it creates such an easier process for you to actually get where you want to go. And so at the core, Name Your Number is all about picking your passive income number. It's about getting clear on how much you need to live off of today based on your current expenses that you need to earn in passive income every single month. And let's be clear, running a business and earning money from your business is not passive income. If you're an
That's
investor in
right.
that business, sure, maybe you're not doing any work and you're earning that. But what I've found is, I've got hundreds of clients on the private equity side. And what I found is talking with these people, million to $5 million net worth, 20, 30, $50 million net worth, especially the people who are in that 1 to 10. What I found is a lot of people are really interested in putting their money to work and investing it to start creating that passive income stream, but most of them don't really have a plan to do it. And so it's about setting that target so that you can actually start mapping out exactly how you're going to get there.
Nice. And what's your number?
My number is continuing to grow. I've got different numbers at different times, but for me, where I want to be is I want to be making $1 million a year, 100% passively. I'm on a track towards getting to that point. And if I back into that from a smaller perspective, in order to get to $10,000 a month, well, I need $1.6 million of investable assets. So everything that I'm doing in my business is getting me another $10,000 per month, because in the business that I work in, I'm not only creating passive income for other people, but then I'm investing my own cash in these deals and then starting to create that stream for myself.
Got it. Makes sense. No, that's awesome. And yeah, so how do that's actually kind of cool. So you're saying for every 1.6 million invested, right? That
Yep.
creates how much monthly in passive income roughly?
At the most conservative level that I'm comfortable with. Now, some people might say, hey, dude, 8% is not conservative. I'm like, let me show you how it can be. But at
Okay.
making 8% a year, $1.6 million invested, no upside in this calculation, just pure passive income, you're kicking off $10,000 a month. So for example, for me to get to $1 million a year, I need to have a significant amount more money. But the most important part is you've got your first number, which is what covers all of my expenses, right? To live the life that I live today, without any, growth to that. Boom. That's your current expense number. And then you've got kind of your ultimate freedom number, kind of this ultimate dream life that you want to live. That is usually a much bigger number. But the point is, once you get first your expenses covered, all of a sudden now you're optional in everything you do. You get to say no to clients you don't want to work with. You get to say no to the boss if you don't like what you're doing. You get the ability to have a little bit more control of your life, and then you can actually start taking more risk in going out and trying to build towards whatever that larger number is for you.
Makes complete sense. And, because my question is like, how do you create a plan to live off of passive income? I mean, this is really exactly, what you do, right? So, and people can come work with you and invest with you at Von Fitch Capital, correct?
Yep. Yeah. Von Finch Capital, that's our private equity firm. And, we invest primarily in multifamily real estate. However, we do have opportunities in, promissory notes. We've got opportunities coming down the line in oil and gas and other strategies. At the core, we work with people to help them find passive income, and, we go buy, operate, and manage those types of investments. But before you can start investing without a plan. Majority of my investors do, right? That's where most people start, because you want to kind of go down that path and start taking some action. But I think it's actually more valuable to first get clear on what your vision is for what you want and why you want it. And why this is so important is because there's a series of questions that you can ask yourself to get clear on what that life looks like. And when you can get emotionally connected to that, and when that is connected to other people or the community, it creates a very, very strong motivation. So for example, what do you want to be doing with your time? Once you've hit this point, you've got that money coming in. Do you want to be on your mission, working hard every single day? Do you want to be hanging out on the beach? Do you want to be traveling with your family? Do you want to be coaching their games? Like, these are choices that you get to make. And when you set that vision, you get to decide. You don't have to let the outside circumstances decide. You get to choose. And so some people are going to have something very different. And that's why getting clear on your personal vision is so powerful. And as a part of this, once you get clear on that, all of a sudden it's very simple to then build a plan about how to get there. But without that vision, it's like you could go start investing today and you could ask me, hey, what's a good investment? And I would have to say, well, what do you want? Right?
Yeah.
What's important to you? Why are you even investing in the first place? Because you might already be able to be financially free if you first get clear on that vision, and then you get clear on your balance sheet, you get clear on what do you actually have, what do you have to work with, what are your investable assets, and then you actually name your number and decide what are those targets along the path.
It's so funny because I think this also works great to think this way in your business.
Totally.
And so many people don't, do this. It's amazing. And I think you just kind of show up and what happens, like life business gets busy and you just kind of like doing, and you want to grow. And we talk about growth all the time. And what we've started to do, in our business is like, where is it that we want to go? And then reverse engineer backwards the things that we have to do to get there and kind of break it down. If you want to hit this number, well, that's going to mean like, X amount of leads, X amount of people. Like, you just start to really like break it down. And it really, I mean, you can follow this strategy in every business. Every business operates differently. If you're e-commerce, it's going to be X amount of people to your website, which will convert X, which will equal X amount of sales. And if you want to hit X amount of revenue per year, then start with that number, then reverse it down. And it's amazing how many people actually don't do this. And you're kind of just running around like with a chicken with no head. And you're like, I just want to do more. I want to do more. I want to do more. But you don't even know like what exactly it is that you need. How many people you need to service it? What is inventory? Like, however your business operates. So, and it's funny because on the passive income side, I think a lot of people are like, yeah, I just want to have passive income, but it's like, not how much. What do I really need? And then what will it actually take to get there? And I've found by breaking these things, working where it is that you want to be and then working backwards, it's exactly what you're doing. And it's really smart. It also makes things so clear. Yeah, I was gonna say, like, it also makes things really clear and helps keep you on track with like saying like, oh, I should do this or I shouldn't do that. And like what you actually have to show up and go do to make it happen. It's helpful.
Well, it's when you get clear on something, it makes your ability to make decisions so much easier, right?
Exactly right.
When you've decided that this is what I want in my business, this is what I want in my life, this is what I want to be doing with my time. Okay, you got to ask yourself the question, is this going to get me closer to or further away from? Right? And you can pre-make a lot of these decisions. That's part of the planning process. We've actually got this phenomenal program called the Passive Income Blueprint, which is where we actually do this with our clients, helping them step-by-step walk through this process. But we've got the first lesson in that program available for people to download. It's called the Passive Income Vision Planner. And when you go through this planner, it's got all these questions that I think are really valuable for you to ask. If you want to do this in your business, great. Sit down and download a copy of the 8 to 10 page vision planner and answer those questions about what your business is going to look like. And then turn around and ask yourself these questions about what your life will look like. Because once you do that, then you can match those two up and make sure the business you're building is actually going to get you closer to the life you want. Because the last thing you want to do is end up building a business and then look around and say to yourself, this isn't really what I want to be doing with my time. But then you're already so deep into it. And so if you can get ahead of that, and you guys can download that at investormindset.com/number. Just head over to that page, investormindset.com/number, and you can download that guide and kind of work through that on your own.
Awesome. That's great. And definitely go check that out. I think, two things is one, you got to do the work and stop and do that planning work. whether it's in passive income outside of your business or outside of your job or whatever. But in your business, right? And you got to do that work in your business in order to make enough money to have passive income, to invest outside of your business, which I think is really important. I talk about this all the time with owners, and it's always amazing to me how many aren't investing outside of their business or anything.
Mm-hmm.
Um, Even as simple as a 401k, but just other types of things and investments. And, if you people don't think about it like they feel like it's their business so they can control it, but things happen as we've all experienced in the world that are out of our control. And, you it wouldn't be smart to just own one stock. Well, if you just own your business and you're not investing in other things, then you essentially just own one stock and have all of your money in one basket.
And I think like
And
over diversification can be a mistake for people. Sometimes people go wild with it. They're like, I'm going to go buy 50 different stocks and I'm going to pick them myself. And then I'm going to try to go buy these and I'm going to do this. There is something really valuable
it's
about having, consolidated focus. So you've got your business, you should invest because your business is likely going to create the highest ROI per dollar invested because you're doing active work. You're trading your time and then all of your team's time to be able to oversee and manage. Return's going to be great, but you want to start placing money in other buckets. One of the most beneficial buckets to invest into is private equity. Now we're focused primarily private equity, real estate, and obviously we talked a little bit about oil and gas and other opportunities that are coming down the pipe. But the point is, the closer that you can get to that business that you're investing in, the better. Now, equities can be great. You can go invest in Apple and you have no connection to Tim Cook, but you believe because it's such a big company that you've got a great investment. And look, I've got all Mac around me, right? I think it's a great investment. But the benefit of
yeah,
private equity is that these are hard physical assets, and in exchange for a lockup period, in exchange for investing your money for 3 or 5 or 7 or 10 years, the rate of return that you earn is significantly higher. And unlike in the public markets, when you're investing in private equity, you actually are allowed to use insider knowledge to be able to create insider type of returns. So, for example, when we're going to go out and buy a 200 or 300 unit multifamily building, we get to know all the details in that market. We happen to know people who are on the planning committee, so we'll hear about things that happen before the public knows. So if we know that information, we can buy it cheaper, which creates a higher return, which creates a lower risk. And unlike in the stock market, you can actually create really solid income streams, creating 6, 8, 10, 12% monthly dividends by investing in these kind of things that you don't find in the traditional markets. But your financial advisor doesn't know about this stuff, not because they don't want to. It's just because the traditional world of Wall Street makes their money keeping your money working for them instead of putting it out into individual businesses that you might have a little bit more influence investing into.
makes sense. And when you say private equity too, you're mainly saying taking your own private equity, placing it into your real estate deals, correct?
Yeah. So when I say private equity, what I mean is investing in anything that is not in the public market. So
Got it.
public market is stocks, equity, bonds, everything in the public market. There's the
Yep.
ability to pull in, pull out, and private equity is businesses, real estate, oil and gas, energy, all these different types of opportunities that are not, quote, publicly available. You might find them publicly, like you're hearing about me talk about this on this show, but it's a whole different world when it's actually a public security.
100%. And what's going on in oil and gas? Just kind of curious to understand a little bit more, about that from your perspective.
Yeah, so the opportunity that we've kind of identified in oil and gas is one, it's a commodity that everyone's going to need, and regardless of where you're at environmentally, it is the fuel that fuels our country. Two, there's a huge lack of it. We haven't been drilling as much as we need to in the US. And three, the big benefit, the reason we like it alongside real estate investments is because the return from an income standpoint, the cash flow that comes off of those type of assets is much stronger. I'm talking If in real estate, I'm looking at 6 to 8, maybe up to 10% cash flow. In oil and gas, I'm looking at between 8 to 15% cash flow, maybe up into the 20s, depending on if you really hit it big. And it's interesting because there's different strategies in oil and gas. You can invest in something that's already drilled, already producing. The risk profile is much lower. The risk that you're taking is something goes on with the well that needs to get fixed that costs money, or commodity price goes down. The other side of it is more of like development in real estate, where you're going to go and actually drill a new well. There's risk in drilling it. In today's day and age, the likelihood of you having a dry well is not, it exists, but it's much lower. But the returns are huge because about
Got it.
60% of the oil that comes out of the ground comes out within the first 1 to 3 years.
Wow. That's interesting stuff. Very cool. That's awesome. And, this is a good question. I always ask this, and just people ask me this about, owning a business. But with everything you're talking about, investing in real estate, all these different things, the question is this for everybody?
The running the business that I'm running, going out and doing all the work and being a syndicator, being an operator, being a fund manager, going and identifying these opportunities that I'm going to bring other people's money into is absolutely not for everybody. It's an active business, just like the businesses that you're running or anyone else is running. But the investment into those types of strategies as a passive investor is a great fit for anybody who fits these types of bullets. Somebody who is looking for a passive return, somebody who's looking to exchange control for the ability to make that passive return, and anybody who likes collaboration or partnership. Because what you're giving up when you invest in a private equity over the public markets is you're giving up the ability to exit whenever you want. So we call that liquidity, right? You don't have the ability to liquidate whenever you want. Sometimes you do, but most of the time you're making a commitment for 3 to 5 or 5 to 10 years into that investment. So you shouldn't go and put 100% of your dollars into private equity unless you're like, I'm an absolute expert in real estate. I'm really comfortable here. I understand the risk. And you keep some of that money on the sidelines so that you have liquidity if you ever need it. But for anybody who is looking to be able to quickly exit an investment, private equity is not for you. But the benefit of investing in private equity is you create a much higher appreciation growth in your portfolio. I'm talking the ability to double your money every 3 years, double your money every 5 years. That is the norm in private equity real estate. It's different in oil and gas, but we'll just stay on the real estate subject. Or you can create great income, dividends that come in every single month on those investments. And if you're making, like we talked about, 8% on 1.6 million, that's $10,000 a month. And if I want to get to that $1 million a year number that I'm targeting, I need to have $12.5 million of investable assets working to create me that $1 million. Or if I'm really comfortable and I think that I've got such a good understanding of the space and I know how to pick investments and I have the right network, which is something that I teach people how to do, then you can actually expect to see a higher rate of return. Like I can get 10% all day. I can get 15% very easily. I can get 20% without taking a huge amount of risk, but it's because I've got a good understanding of the space. And so that's the difference. When you're investing in traditional markets, you're usually relying on a financial investor, and for some reason you feel more comfortable because it's something that's been talked about a lot. So when you get into private equity, you have to start understanding a little bit more about these investments. You don't need to be able to do them, but when you start understanding the structure, the timeline, and the risk, which are all very easy to understand once you kind of get hooked into the space, then it's something where you can feel a lot more comfortable, going after higher returns.
Makes sense. And there's a lot of interesting things out there. And I think today too, the ability to participate, and not actually have to do it. I mean, a lot of these opportunities were not really there weren't as many out there, years ago. So you had to kind of go do it all yourself, figure it out yourself, make the mistakes yourself. And I think if you don't have the experience or know, you should work with, at least consider working with a, experienced, group like yourself, where, you have the knowledge, you've been there, you've gone through a bunch of transactions, and at the very least, it's a good way to get your feet wet and learn the business without having to
Mhm.
take all the risk on, yourself.
Well, it's
So
interesting because Joe, these things have been around for 100 plus years. It's always been exclusively available to people. It's kind of you had to know the guy. You had to be a
yeah,
part of the
yeah,
country club and somebody told you about it and you got referred, because the richest families have been investing in these types of general partner, limited partner investment partnerships for decades. But what happened was back in the Obama administration in 2012, they created an act that allowed people to start allowing investors who are accredited to invest into those same kind of opportunities. And the whole idea was, hey, why should these only be reserved for the richest of the rich? We should start allowing other people to get access to them. Wall Street fought back really hard, but because of the time of 2012 and the real promotion of, hey, how do we get money invested into businesses to grow? That's what ended up leading to kind of this renaissance, allowing a lot more people access to these who maybe aren't family offices with $50 million.
yeah, yeah, definitely wild. And you've seen that, I mean, it's definitely changed so much in the last, 11 years now. Um, where I remember pre 2012, you didn't really hear about any of this stuff. So it's really cool. And it's given the ability for, someone that didn't grow up or come from an ultra wealthy family to be able to get involved and and earn and grow their money, which is great. I think it's a great thing. So has this market, how's the current market, impacting you? Is it helping you, hurting you?
Yeah, so we're talking about this in March of 2023. And what we're seeing in the market is that over the last year, interest rates have gone up from near zero to, they're at like 3.5%, 4% from the Fed. And what that translates into the market is that, one, there's a lot less debt available. There's a lot less uh, lenders who are interested in lending in today's market because they're not sure what's going to be coming down the pipe. They don't want to put as much money out with the same kind of leverage that they would 24 months ago because there's uncertainty. But really, it's less about the lenders because they have money and a lot of people are looking to place that money. What it really comes down to is that buyers and sellers are in two different camps. Sellers are looking back the last 12 to 24 months and saying, I want to sell it for what it was worth last year. And buyers are saying, hey, I would be willing to pay last year's price, but I'm not sure if it could potentially be worth less tomorrow. And so, because when interest rates go up, the cost of capital goes up, and therefore value of those properties goes down, we're at this point where it's really hard to find good deals. And so what we've really been focusing on is looking at opportunities where you can do loan assumptions at a lower fixed rate, or where we can get the seller to carry back the note. Because if we can get them to carry back the note, on our last deal, that was worth about $500,000. On a typical deal, that could be worth millions of dollars. So it's a tougher market. You can still find great deals. And I do think now is the time to be getting your money ready, pulling it out of the market, getting it ready to start placing it in private equity. But the amount of deal flow, I mean, we were closing a deal every month previously. Now it's once a quarter, once every 5 months, just because it's hard to find those ones that we feel super confident in and we're able to de-risk.
Makes sense. Makes sense. And what's like, what's next for you, Stephen? Like, what's your focus, and where do you grow from here?
Yeah, I mean, we're just really, really passionate about this financial education mission that we're on. What I know is that, the more young people that we can teach about money and starting to understand that, I know that we're going to make an impact. So a portion of our profit goes towards those types of causes, both directly and indirectly. And then on the other side of the coin, it's when people who have money start understanding how to use that money so that it can start really working for them. I think it's a really exciting place to be, because I've had conversations with people who have exited business, made tens, 20s, 30s, millions of dollars, and they're still stuck in that traditional mindset. So they're thinking their options are limited. And just by having the conversation we had, Joe, and people listening, I know that it'll plant a seed for people to then go find the information to start being comfortable taking back financial control. So, we're doing deals. Like I said, we're still looking for great opportunities. Got great opportunities in oil and gas coming down the pipe. We're still putting out great. We've got a short-term note fund for people to place capital into. And then, of course, we've got our passive income blueprint workshop where we're training people how to create their own plan and know exactly what allocation they should be looking at when it comes to private equity.
Good stuff. I love everything you got going on, and really appreciate and respect everything you're doing. And more importantly, how you got started from nothing and have grown to where you are today. And obviously it didn't happen overnight, in the grand scheme of, the world. You did it in a pretty, a pretty quick amount of time. So, much respect to you. I know it's been, 9, 10 years, but it's still it's pretty amazing, what you've been able to build. And what's something that you would leave, like something that you'd leave with, just, piece of advice that you'd give to business owners, out there?
Yeah, I think the biggest piece of advice is that, once you get clear on what you want and why you want it, life gets a lot easier. And then do the hard thing of saying no to the thing that isn't going to get you closer, right? Like, it was a tough place for me to be when I'm running this business, flipping all these houses, and I come to this realization that this isn't the business I want to be running for the next 20 or 30 years. And that when I had this personal tragedy in my life and, there was challenges that were happening, it really allowed me to get much more clear on what it is that I want and why I'm going on this path. So I think I just really want to emphasize that it's easy for us to get caught up in the day-to-day. It's easy for us to be on the grind, making sure our team's doing their job and going after more sales. But take a moment to step back, or better yet, take a weekend and leave and shut your phone off and sit down and really reflect, or reflect with your spouse. Like, what are we trying to build here? What is this all for? Are we headed in the right direction? If you're not, make a little adjustment. If it needs to be a big adjustment, make it. It's hard to do, but it's so worth it, because that's where you can not only have fulfillment, but you can start living that life and know that you're going to be able to keep doing it for a long time. So
Good stuff. Really well said, Stephen. Really appreciate the words. Thanks for being on the show. Thanks for your time. Please make sure to check Stephen out. Where's the best way to find you, Stephen?
best way to find me is, if you liked listening to today's show, go search Name Your Number by the Investor Mindset on your favorite podcasting app to find the show. And if you're interested in following me on my journey while I'm out building onto my passive income number, and you want some inspiration and some advice on that, we're doing lots of lives on Instagram and LinkedIn. You can find me at Steven.Pesavento on both of those platforms.
Good stuff. We'll keep doing what you're doing, Stephen, and more importantly, keep growing. Thanks for being on The Grow Show.
Thanks, brother.